Good morning, all. CamelbackTrading.org coming to you this Friday morning, September 23rd. We are looking at window traders, market profile of the ES and SPY. Need to clear some things up and reiterate some things. Yesterday, when I said I thought there was a good chance that at the 37.80 level and 375 level that could be long-term money buying it. It was important for the day time frame. Okay, the day time frame. Simply because as the market kept trying to push low, it was being absorbed. And you can see that, right? We only made a low. We made a new low indeed. They never could make a new low. And we finally got an attempt at a pretty good rally in L&M before they gave it all up. So that was important for the day time frame. Again, there's no certainty who's buying it. And second of all, if it is long-term sticky money buying it, doesn't mean they're going to stay in the same place today, right? We saw that back in June if with those two big gaps down. So, I had gotten a bunch of emails and messages on Twitter asking me about that. We also said, if you recall, we always give both sides of the market. We did it before the Fed met, and now we've been giving it since then. We said if this happens, this could happen to the upside and vice versa to the downside. Well, the downside destinations were first at 380 gap, then 371.04 monthly low. We're trading at 369.85 right now. And then eventually the yearly low. So the targets are being met. Right now, our downside targets, which we spoke about, if that was to happen, where the market didn't like what the Fed had to say. So very important to distinguish between the two. We said clearly we can make new lows if this happens. We'll show you on the chart. I said, is this a new progression of lower highs, lower lows? We had that January through June. They broke it for July and August. Well, guess what? We're back to it right now. All right, we're going to recap all these charts tonight, but we'll show you SPYs and exactly what we're talking about again. Now, again, what's the game plan for this morning? Well, quite simply, again, the gap is very large. We're talking about right now, with 75 minutes to go, a $3.50 gap. If the gap gets where I think it's good risk reward, I will look for a short. If we get to a point wherever we open, we get above the opening, don't fill the gap, and come back down through the opening, again, that's another decent short than to use the opening as you're out. The indices will be down rather good this morning, which means on the turnover at 9:45 or 10 o'clock, there's a chance, especially if it's not at their lows, that once the second 15-minute opens, they push down. So you can take a short prior to that. Those are the things I'll look for. So at 9:30 on the nose, I'm probably not going to be looking for a short. Now, SPY is trading right inside a set of single prints from back on June 21st. So we'll see if that holds at least the first time there. These are visual points. But I really don't think looking for a long is the answer right now. The overnight, right now, I'm going to guess, is the majority is short. But again, we'll see come 9:30 what it is. So we see if we do get an inventory adjustment. So right now, sellers, look, we also said yesterday, with all the absorbing going on, nothing's changed in the bigger picture. Look, sellers are in control, right? We couldn't even get into the price probe from the 21st on yesterday. So sellers are certainly in control, but in the intraday time frame, they were having trouble. And it resulted in somewhat of a rally, at least for a little while. So those are things to differentiate. So weekly is down and the daily is down, monthly is in balance. So sellers are still firmly in control as far as what's going on right now. Now, let's just go to the chart real quickly. So here's the monthly, right? Things are not looking too good right now for bulls. We're below the trend line from the COVID lows. Now, again, one day doesn't make a market, plus it's a monthly chart. We have to see where we end the month. We still have another week to go. But it will be interesting to see if we start getting acceptance below this. We hit, right now, this morning, looks like we're hitting our target of July's low. Well, the next target is our yearly low. And then it gets really dicey. Okay? The yearly low is 362.17. That is right above December of 2020's low of 362.03. We said at the time when we got there that at some point you'll take both of those out. Now, after that, look at our next monthly low, ladies and gentlemen. 327.24. Hey, my badge number, 27.24. Look at this 4-month balance. So again, it is all baby steps we talk about. But if we do make a new low and stay below this trend line, well, guess what? You don't think we could go visit that? Of course we can. So right now the monthly's in balance. The weekly, outside week down, is firmly down. And then on the daily, after coming out of a 4-day balance yesterday, we're looking to gap lower. We're trading at 369.80. Right above, right? We've been talking about this. Lower highs, lower lows from January through June. July and August broke that trend. We failed at May's high. I couldn't have stressed it more back then on August 16th. Acceptance doesn't mean getting over May's high. Acceptance over May's high. Well, we never got it. And since then, we started our progression of lower highs, lower lows again. And this morning, we're going to be going right down basically to that trend line. And the reason why May's high was so important is because we talk about markets don't go bull bear or bear bull. Well, we were bull in December, balance come January, right? February went bear. Then we went balance. February, March, April, and came out of balance bear in May. So the second leg down started in May. So when we took out July's high in August to really, well, July basically put us in balance with the inside month, and then August took it out. We took out 3 monthly highs, including the one that started the second leg of the bear in May, but never got acceptance above it. So now we're in a 5-month balance. It's huge. But the question's going to be, are we going to come out of this 5-month balance back to bear again like we have all year? Thanks for the likes and subscribing. Good luck trading today. And we'll recap the day and the week at 4 p.m.